Good evening. Welcome to the ShadowTrader video weekly for Sunday, June 8th, 2008. Friday's sell-off action really came out of nowhere on the heels of increased unemployment rate up to 5.5%, which came out early in the morning, gapped the futures down quite a bit. You can see there's a minor gap here between Thursday and Friday, and then the selling just stayed strong the entire day. When I say that this kind of came out of nowhere on the heels of that report, the only reason I say that is because the prior day, Thursday, as you can see here, was such a big body candle to the upside. So it's relatively surprising that such a big thrust to the upside, it was one of the biggest body candles you've seen in a while here on the S&P. For that to be answered by Friday's horrific action here is definitely somewhat surprising. Especially in light of the fact that while all this was going on earlier in the week, when this Thursday advance happened, the NASDAQ 100 actually broke out to new 52-week highs right here at the exact same time. And the NASDAQ composite did so as well. You can see it just managed to pierce by a little bit here. I'm not even sure if this is high enough. This is 25.51 and this is 25.49, so almost. So it was just shy by 2 points actually. So you had a test on the NASDAQ composite and you had a breakout on the NDX. Obviously, the S&P and the Dow were a little bit lagging, but still, this Friday's action was a little bit surprising. Regardless, the main thing we need to concern ourselves is where this is going to take us in the future, or where the next pivot point is going to be. I've listed the 1324.25 here on the S&P as a prior swing low, which is from this date here, from April 15th. That's really the only thing I can see there. I think it's going to correspond with a Dow trend line here right at 12,000. The reason I put this here, you can't really see it very well on the dailies, but if you flip to a weekly, which I always say you should always scan the longer term time frames. You can see that when you touch these points here perfectly, you come right to the 12,000. So this is where I expect the market is probably going to head. So the low here is 12,192. This is 12,000 even. So you're looking at 200 Dow points down to here, right? And unfortunately on the S&P, it's quite a big drop. It's about 35 points, right? From 25 to 60 is about another 35 S&P points, which we could easily see. One of the best scenarios that could happen going forward, going long, to be honest with you, is if on some super heavy selling, this area was lost. Because what will happen then is going to be a classic undercut, where once this area is lost, it will wash out the majority of the sellers. Because this is where the panic will set in, and there will be people who will just be selling the market hard as it breaks down through this level, and the sellers will probably run out of bullets. And you can see that there's two support areas right here next to each other. So if we break down through this 1325 area, that next low is a 1312. I wouldn't be surprised if the market parked itself somewhere in between these two areas and then rallied really hard, because what would happen then is you'd have an extreme overextension from a 20 MA, and we will have broken really far away from the 50 MA as well. And as you can see, when the markets get too far from the 20 and the 50 on the daily S&P, it's kind of hard to sustain. All right. One of the reasons that I think that even if we come down to here and test that there will be a strong rebound is a simple fact that when I go through all my sectors, I still don't see everything hitting in sync, and there's still so many pockets of strength in this market. And it would really take all the sectors selling off at the same time, to really crash everything hard. And in the face of the oil index, it still looks like this. I'll switch to a weekly so you can see how strong it is, right? Just barely selling off to prior highs to the breakout point and then rallying a little bit this week, right? And then also the oil services, which hasn't even sold off yet, is holding up so well. Internets on the NASDAQ side, right, is just building a really nice shelf there. When I see this move back to the high of last week to the 446 area, it's going to be a buy basically, right? So you have NASDAQ tech stuff. Oh, and also stocks, I should mention. If we're going to talk tech, we can't just talk semis. We got to talk tech. You can see that the semiconductor index had a huge run since March, and since then it's sitting there rock solid. So we would have to see a lot more bearishness for a real, bear turn to come back. So what I'm really thinking is, as I've said in earlier videos, that we could be making just a really, I don't want to call it a complex top anymore because it would have to be closer up to this 1432 area, but kind of a complex pattern that'll rebound back to the upside eventually. One of the things that also could be a factor here is if you look at the banking index, right, which is just destroyed on the weeklies, and the XBD, right, which is the broker deal index, which is not as destroyed on the weeklies, right? You can see that the brokers here are still holding up okay. They haven't quite collapsed. But if I go back to that banking index, right, you have to figure that eventually, see, since this has just been going straight down for a while here, 4 or 5 weeks, there's going to be support on a longer term time frame, right? And I've talked about this monthly before in the banking index, and I want to bring it up again now to show you something, right? See this? Look at these prior swing lows in the banks. And this is 03, right? And look at how strong it is. Boom, 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 right? This was 3 years we held here and bounced hard. There's a lot of support here on the banks. No matter how bad the picture looks, you can't deny this chart. So if I go back to present time and stay on the monthly, you can see right here, you're getting very, very close. And this distance to me could be the distance that the S&P just needs to crash down that last little piece, right, to come down to that 1324 that I wrote there, or maybe a Dow 12,000. And then I think the bears would have to seriously reassess the situation. All right? Now, I always want to leave you with some new stuff going forward. What you should be looking at, what I'm looking at. We've been talking about this stock for a while. Illman, rather, not Ivgen, in the focus report. And I'm really salivating over it because I love how it's just sitting here solid as a rock. Look at this weekly. When this sees 80 again, I think this is kind of a screaming buy. So I want you to keep this on the radar. And when it does become a buy, we'll definitely take this in the focus report probably over 80. So those of you that are subscribers, you'll get a real-time email as we look at this. Also, the metals have been very strong this week. There was kind of a rebound in gold a little bit. So notice that there was a fake out here below the trend line. And then I think what this did is kind of made an undercut. And then notice that in one fell swoop, you had a gap, right? There was some movement up here. In line with up in the dollar, or up in gold would be down on the dollar. And the one that's looking the strongest right now in terms of the pairs is the yen. Because look at the FXY currency. I'm just trying to show you guys some different trades you can look at. Even as the market is getting smacked down, there's still stuff that can be looked at from the long side here. Look at this beautiful trend line here. Right? This is yen dollar. So when the dollar goes down and the yen goes up, this goes up. This is FXY, Foxtrot X-Ray Yankee. Notice that this trend line support here is right at a prior breakout level. You had a breakout level. So anyway, that's FXY. Back to the metals. BHP Billiton has a wonderful pattern. Looks decent on a pullback there with some support at that 80 level. I believe it can also be played as BBL, right? Yeah. They have two stocks. There's some silver stocks that look good. Back to the metals again. Look at the SSRI here. The SLV silver is actually acting much stronger than gold, right? There's the weekly silver chart, and there's the gold chart, right? See how the SLV is a little bit higher, close to that 20 MA. So I like that SSRI. That's probably the best looking play I can see. You can play IAU, which is COMEX Gold, which is the same thing as the GLD if you want to have that. And what else? That's about it. I have a list of names, which I'm not going to talk about in the video, that are the really, high relative strength, great fundamental names. Those are the ones that I'm saving for all the people that are subscribers to our newsletter. If you haven't checked us out yet, also, as a heads up, we are going to do another free week before the end of the month, so be aware. It could be very soon, actually. There'll be a free week of the newsletter. If you're not yet a subscriber, all you have to do is be on this video list. So if you're watching this video from ShadowTrader.net because you subscribed there and you get the email on Sundays, then that's all you need to do. You don't have to do anything, and then we'll just start sending the newsletter to you. It comes out every night at midnight for free, and you can test drive it for a week. All right, so that's that. Just to recap, I think probably a little bit lower on the S&P. Let's watch this 1324 area down in here. It could be ugly if we were to move all the way back down there. Remember, Dow 12,000 as well on the weekly. All my trend lines got erased. Boom. All right. On behalf of myself and the entire ShadowTrader team in beautiful Philadelphia, Pennsylvania, and of course, as always, all the good people in Chicago, Illinois, at the one and only Thinkorswim, I wish you good trading and good night.